Hello and welcome to another trading video recap for a daytradersjourney.com. Go to my blog at that website anytime to watch previous videos as well as live trades that I've recorded in the past. Today is August 11th, 2015, and this is for the E-mini S&P 500. I'm going to go over two trades today that were a little bit more advanced. You can see my trading rules and how I trade on the blog, on the archives, and watch different videos. I'm going to explain my trading rules and entries. But in this video, I'm going to go over a little bit more advanced trade setups. Now, here's the first trade of the day, and this is the first time that price broke above the 5-minute opening range, which is the blue shaded area, along with the EMAs being bullish at the same time, which is the 21 EMA, which is the orange one, above the purple one, which is the 50 EMA. EMA is the exponential moving average. And I marked it here as third entry long. You know, we like to take trades at what are called second entries. This is the first trade of the day. It's based on a third entry long, and the reason being is because the second entry wasn't a valid trade based on our rules. And here is the reason why. Here's a swing high here, and you count. Here is your first entry with the break above this red bar, and here is your second entry with the break above this red bar. Number one, we don't take longs above red bars or bearish bars if we're going long. That's the first reason we didn't take this trade. You'd always wait for a break of a green bar for going long. But more importantly than that is look where the position is in the trade. We basically like to take trades off pullbacks, you know, and second pullbacks, or what they call second entries. Here, there's not much of a pullback, and we want trades to be pulling back to the 21 EMA or the 50 EMA or lower to go long for a long setup. And the same is true for shorts. We like to get pullbacks to the 21 or 50 EMA on the downside. You know, pull back to the 21 or pull back to the 21 and the 50 here. So that's another reason why you wouldn't take this second entry here. So what's after the second entry? The next time we have an entry which is a break above the previous bar highs, would be here. So this would be your third entry. So this was your first, this was your second, and this is your third. And that's why I call it third entry long. And you would have entered it around 2084 and a quarter, and it would have reached the first two targets. I have 3 targets total, but so this would be a partial win. Blue shaded circles are going to be for trades that at least reach the first target or more. Red circles are trades that were losses. That just got stopped out before reaching any targets. So anyway, that's an example of a third entry or fourth entry, or anything that's beyond the second entry long. Not to confuse people, with the fact that I only take second entries. It's basically taking trades that are at least a second entry or later, second, third, fourth, as long as they're valid entries based on our rules. And the EMAs and the position of the trade are in compliance. Here is an example of a re-entry trade, and I describe it here in text, so you can read that as well. But basically, a re-entry trade is taking a trade after you get stopped out of a trade. So here's an example of we have a new swing low right here, and we have your first entry here, and you have your second entry here, and you don't go short until you have the break of the bear bar, which is this bar here. So your first entry, this trade would have been entered on around 2076 and a quarter, and it didn't reach its first target. It went down a little bit, then went back up, broke above its high where I placed my stop loss, and I got stopped out. So it's a losing trade. But whenever I have a losing trade, I like to draw this resistance line where the high was on my second entry short. So I could I like to place my stop at that level or above it. And when it gets stopped out, and price comes back down instead of going, continuing back up to the upside, I want to get back in. And the reason being is because the technicals for getting in this trade to begin with, the second entry, are still valid here where this blue circle is. The EMAs are bearish, which is 21 below the 50, where price is below the 5-minute opening range, clearly. And also that the price broke below this support or resistance line, which is also could be a support line, but right now it's a resistance line. It broke down below that resistance line, closed below it with a nice bearish signal bar, and look at this red bar here. So I like that trade to get in after it broke below this level here. So this is a re-entry trade that I would get in, and I would take long basically after this close, which is roughly about 2077.50, and that worked out for a full target, all three targets there. So that's a more advanced trade. Again, I call it the re-entry trade, and this gives you some explanation of how I get in those re-entry trades. Price has to break and close below that resistance line, and all the fundamentals or technical reasons why I got in this trade, where I got stopped out on, is still valid. If price started going back up and continued to go back up and never break below this resistance line, I would never go back in short. But because it did, and the EMAs were still bearish and were priced still below the opening range, 5-minute opening range, that's still a re-entry trade. So that's an example of some more advanced trades, and I'll go over some other more trades tomorrow or the next day, and go over some examples of shorts and longs that might not be easy to catch, like a third entry or a fourth entry. All right, talk to you tomorrow. Thank you very much.